video, we are going to practice calculating inventory value. If this is something that's brand new to you, that's okay because this particular exercise is designed for beginners. It is pulled from our advanced level ProAdvisor certification course. And if you want more information about that course after we go through the exercise, be sure to click on the link below in the description. Now, usually when we are doing our exercises, we work in the sample company, but this one's a little bit different because we are going to be doing some math. We are going to be calculating that inventory value. So there are two parts to this particular scenario. We're going to go through part one, work through the calculation of it, and then see the solution, and then repeat that for part two. So let's go ahead and read through part one and see what we're doing today. George has decided to start selling widgets. He found a supplier where he can get them for $5 each. He buys 10 and sells 4 of them for $10 each. What is the value of his inventory after the sale? So if you want to go ahead and pause this video and try it yourself, you can go ahead and do that. We are going to be working on a whiteboard and working through to find the solution, and then we'll come back and actually see if what we have done is in fact correct. All right, so thinking back to the scenario itself, remember that there were 10 that he purchased, and he bought them at $5 each, and then he sold 4 of them. Now, to calculate the remaining value, you would take the 10 that he originally started with that purchased, you subtract the 4 that he sold, and that equals 6 remaining. Then you would take those 6 that are remaining and you multiply the cost of each that he bought them for at $5, which equals then $30. And that is the inventory value. All right, so now that we have worked on that calculation, let's go ahead and see if what we did is in fact correct. So here is the solution. The amount he sold them for, that $10 for each, is irrelevant. It affects the sales income, but does not affect the inventory asset value or COGS. The easiest way to keep track of FIFO or first in, first out is to create a table showing the amount in inventory, which is here, the purchase price, and then keep track of each sale. So here you can see this calculation. This is what we just did. The quantity, we started with 10, that's how many he bought, minus the 4 that he sold is a total of 6 left in inventory, and the purchase price of each of those was $5. So here we see the solution. He has 6 left in inventory, which he purchased for $5 each. So the value of his inventory is now $30, and that's exactly what we just did on our whiteboard calculation. So we did it correctly. Congratulations. Let's move on to part two of this scenario. George is excited about his new business. He decides to buy and sell more widgets. The vendor is having a sale, so he buys his next batch for 10 for only $4.50 each. He sells 10 widgets and receives $100. So what is the value of his inventory after these transactions? Once again, if you want to pause the video right now and try it out yourself, you can go ahead and do that. We are going to once again work on a whiteboard to try and figure out what that calculation is, and then we'll come back and see if what we do is in fact the correct solution. Now, before we can start the calculation for part two of this scenario, we first need to remember that at the end of part one, we had 6 widgets remaining. Okay, that'll be important as we go through this next part. Okay, so in part two, he purchased 10 more. So 10 more widgets were purchased. And he purchased them for $4.50 each. Now, after he made those purchases, he had sold 10. So 10 were sold. All right, so let's go ahead and make that calculation. The first thing that we need to remember is that this 6 remaining were the first ones to go. So let's go ahead and make that calculation. 6 minus 6 is 0. And we need to have another 4 to equal the total of the 10 sold. So of those 10 that were purchased, 10 purchased, 4 more were sold. So that's 6 remaining. So 6 plus 4, those were the total that were sold right here. And then we ended up with 6. So of those 6, we need to do a same calculation as what we did in the first part of this scenario. 6 times the 450, which is what he had purchased those for, equals $27. And that is the inventory value. So now that we have done the calculation on our whiteboard, let's go ahead and see if what we did is in fact the correct solution. So here's the solution. The amount he received, $100, is again irrelevant. It affects the sales income, but does not affect the inventory asset value or COGS. So since things are getting a little more complicated, we're changing up that table a little bit from what we had on the part 1 of this scenario, and added a date to the purchases. So we have a September 1 and a September 15. That way we know which ones are the oldest or the first in. And his original purchase, we will say, is on September 1st. So this is that first sale. And then the second purchase was on September 15th. And we'll also need to keep track of how many we sold. He previously sold 4, and then there were 6 left in inventory. So here we go. Here is that first one, that first sale after he bought 10. He sold 4 and had 6 left over inventory. There's that 5. And then that second sale, he had sold a total of 10. That's 6 and that 4. So he had to get rid of the first 6 that were sold at that $5 per piece or each. And then 10 minus the remaining 4 means that he has 6 left in his quantity, and those were the ones that were purchased at $4.50. So, reading through this solution, this time he sold 10 widgets. The first 6 came out of that September 1st purchase at $5, as mentioned here. And then the remaining 4 came out of the September 15 purchase at $4.50 right here. So, again, he has 6 left over at the purchase price of $4.50. And so the value of his inventory is now $27. It's that 6 times $4.50, which is exactly what we did. And that is it. That is how we would calculate inventory value. And again, that's at a beginner level. Now, if you like this exercise and you want to do more like it, or if you would like more information about that advanced level ProAdvisor certification course, be sure to click on the link below in the description. And I will see you in the next exercise.